Hey traders and investors, it's Serge Berger here. One of the things I've been talking to Steady Trader members quite a bit about over the past few weeks actually is the relative strength we've been seeing in housing stocks, home builder stocks, even things like Home Depot and Lowe's that have given us good relative strength and actually absolute strength as well. So I want to give you a quick overview here and again show you the power of so-called ratio charts because again, unless we understand stocks in relative terms, what it means versus the broader market, we're actually missing out on about half the picture. So have a look at the chart of the XHB, which is the S&P Spider Home Builders ETF, and you can see in absolute terms the chart itself, just a price action, you can see it's pretty bullish. It broke past a new high here. What was that in January, and so on, and it's going higher. But if we look at this in relative terms, so we look at it in ratio chart terms. So I'm going to take the XHB and divide it by the SPY, which of course is the S&P 500 ETF. You can see visually what I would suspect most people would understand. This is a much more bullish chart, right? Just look at it in terms of basically just a chart or a ratio that is absolutely giddy to break to fresh all-time highs here at some point, probably sooner rather than later. So if I look at this and I pull this chart back a little bit, you can actually see that if I were to extend this resistance line that we're at in this ratio goes back basically to April of last year. So that's a pretty strong trend. On top of that, if you want to draw another very simple trend line, again, this is all for perspective. It shows that if you just look at charts in absolute terms, it doesn't really tell you that much. You got to always also double check the picture and make sure you're actually playing with the trend. So the ratio is actually broken out in, let's call that January as well. So in January, this ratio, so the relative strength of home building stock as a group has actually broken out versus the S&P. Again, that's not surprising because the S&P has basically done nothing this year at this point. It's just round tripping and going in circles and chasing its own tail. So, but the ratio is very attractive. So you can see the ratio here broke above this diagonal resistance line. Now it's basically just coiling up and has been coiled up below this resistance point since early February. So to me, the longer it sort of churns below resistance, ultimately the better the chances it really starts exploding higher. So I hope this makes sense, guys. Again, look at things in relative terms and don't just stare at your single name stocks in a vacuum. Have a great trading day, and I'll catch you in the next video.